Good Friday morning. We made it from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance executive editor Brian Sozzi. Where do you even begin today? You have to begin somewhere, so I'm going to begin here. NVIDIA crushes its earnings report, and the stock is hit with a nasty downside reversal yesterday. Keep in mind, more than 30 Wall Street analysts raised their price targets on the stock in the wake of earnings Thursday night. At the same time, the crypto rout is continuing. Some of these crypto tickers are the hottest tickers on the Yahoo Finance platform this morning as crypto falls further below $90,000. Let's get down to NASDAQ and check in with Brooke DePalma. Brooke.
Good morning, Brian. I mean, what a 24 hours. We saw one of the biggest reversal that we've seen in months as investors tried to digest a few key things here. The AI bubble risk, the Fed potentially cutting interest rates or potentially not cutting rates, and then also what Bitcoin's doing. And I know we'll get all to it, but let's take a look. All three major indices at the open. If you take a look over the past 2 days, it's been quite a roller coaster for the S&P 500, now moving up about 0.6% at the open. But you can see that pop that we had on Thursday, that reversal to the downside, and now over the past 5 days, this is one of the worst weeks that we've seen since that Liberation Day back in April, as you can see right here. But really, that downward momentum the past 5 days, but still year to date, keep in mind the S&P 500 is still up nearly 12%. But the NASDAQ, a similar ride there over the past 5 days, down about 3% on the week at the open, but still up about 0.6% at the top, and the Dow just slightly behind at up nearly 0.5%. But once again, not a stellar week for the Dow either, down more than 2.5%. But I do want to take a look at gold because over the past few days, or really the past 2 months, as investors digest all these headwinds, we have seen gold see quite a ride here. Year to date, though, gold has seen such momentum over the past 2 months alone, up nearly 9%. Year to date, up more than 50% here. This was really a key player, especially since April, as investors sought out this as a safe haven. But crypto, a bit of a different story there. It was doing so well heading into the back half of the year. October, we talked about it was supposed to be Uptober, and then it ended up seeing this downward reversal as investors sort of had this risk-off approach. Now, year to date, we are seeing Bitcoin see reversal in those gains that it made earlier this year, down about 11.5%. And of course, all eyes on AI in this environment. Taking a look at the NASDAQ at the open, we do have a bit of a mixed picture here. Google, Tesla, Intel holding on to some gains here, but NVIDIA now reverse a bit in the flat. Microsoft, Amazon, and Broadcom as well, trying to hover above the flat line here, but definitely investors just trying to make sense of if the Fed will cut interest rates. We did hear from New York Fed Williams this morning that potentially they could cut rates in December, and that's why we're really seeing this increased momentum across the major averages this morning as we make our way into the last trading session of the week.
Thanks, Brooke. Appreciate it. All right, here's what's on my watch list right now. An AI stunner. NVIDIA blew it out of the water on its earnings day Wednesday night. Yet, what was shaping up to be a big day of gains on Thursday for NVIDIA ended in a swift reversal to the downside that pressured the broader stock market. The selling pressure has extended into today. Here's what pros have told me on opening bid this week about all things AI.
Valuations when it comes to the broader markets are historically high. Credit spreads are historically tight now between high yield spreads and treasuries. So this isn't the time to perhaps lean into risk in an aggressive manner at this point in time. One needs to be more balanced.
I like AI stocks over Bitcoin any day, any time of year, because there's hope on it. We have a huge build out that we're going to do over the next couple years. And I understand we can chart crime it. Brian, we can just keep putting debt to equity ratios on Oracle and keep talking like it's a bubble, right? But this is not .com. I was there during .com. I made and lost many, many fortunes during .com. And this is sort of fundamentally different.
Crypto in general is a leading indicator of macro sentiment. It's one of the more liquid risk assets. It's the only one that trades on the weekend, and is also the only one that doesn't have cash flow or corporate partnerships or any AI froth to potentially boost its outlook. So it's a pure leading indicator, and it has been signaling this sell-off now for a while.
The broader problem we are starting to address with AI is potential overcapacity. Are all the hyperscalers going to build so many data centers, and what are we going to do with all of them?
But I got to push back on this AI bubbles talk. I'm not sure what the narrative is supposed to be with the AI bubble.
Do you chase AI? Do you chase Palantir still at 125 times sales? Not for us. Not to say it won't work as a trading vehicle, but price is what you pay, value is what you get. We like a higher margin of safety.
How can you not like the spiky hair Lee Munson there? I mean, that guy's always bringing the heat. Love Lee. All right, Bitcoin is taking a beating. It's straight up getting ugly in Bitcoin. Check out these stats as Bitcoin has officially sunk well below the $90,000 level. Bitcoin is on track for its worst monthly performance since 2022, having shed about a quarter of its value in November. The total market value of digital coins has fallen below $3 trillion for the first time since April. And not all is bad in retail. The retail sector looks poised to enter the weekend with a little bit of positive news for a change. Gap beat estimates and gave a relatively upbeat holiday outlook. BJ's Wholesale followed Walmart's Sam's Club division by posting a solid third quarter. So lots to get here to today. Here in the opening bid roundtable, Angelo Kokorfas, Edward Jones, Senior Global Investment Strategist, alongside Yahoo Finance Senior Reporter Brooke DePalma and Tech Editor Dan Halley. Dan Halley, I want to start with you here. Help us understand what happened. So NVIDIA came out, quarter was good, guidance was really good, Jensen rocked it out there on the earnings call, stock was going to open up pretty well, and then boom, around midday we saw that swift reversal. What happened here?
Yeah, it just seems to be a reaction for the broader market. It doesn't seem to be anything to do in particular with NVIDIA. I think one of the takeaways was if you looked at the stock price immediately following, usually there's a decline just because, it doesn't meet expectations. People want 200% growth still or 150% growth, things along those lines. But, law of large numbers, they're, doing 50% growth, which, hey, what are you going to, sneeze at that for? But that's usually what we've seen happen over the past few quarters. This quarter, we saw the stock price rise following the announcement, in fact, around 4%. And then, as you said, going into the morning, it was around 4%. It went through pre-market action and then into the actual trading day. And then, around midday, it just started this reversal. And then, we just saw the rest of the market kind of take the same kind of dive throughout the rest of the afternoon. So I don't think it has anything fundamentally to do with NVIDIA. They had a solid quarter. Jensen Huang had kind of done his best, along with CFO Colette Kress, to push back against the idea of an AI bubble. They say that there's plenty of room for growth. They say that companies are using their older chips as well, pushing back against that Michael Burry tweet saying that companies like Meta and Oracle are artificially raising their revenue numbers by kind of pushing aside the depreciation of their chips. And then we also had, obviously, Jensen directly address the bubble and the idea of circular investing, that thesis that, NVIDIA is investing in companies that then go ahead and buy NVIDIA chips, basically paying them a smaller amount to have a company spend a big amount on them. And so they went through all of that. It seemed to convince traders. It just seems as though the rest of the market just started to kind of fall on its face.
Angela, let me get over to you here. Should investors trust rallies in the near term?
I think what is happening the last couple of days is a recalibration in sentiment and expectations. Nothing in the fundamentals has really changed. We continue to see companies report very strong results, but as we know, valuations have been elevated, and what is happening is an uncomfortable but yet healthy reset. As we think about the markets, they have not corrected. We have not seen a 5% correction in 146 days. Typically, we get one of those about 3 times a year. So I would say that potential reset and pullback that we are seeing now provides a better setup for 2026 as the fundamental backdrop remains positive. So investors potentially still want to participate in the AI upside, but now it is a good time to protect some of the downside and manage risks by diversifying in other areas and sectors. And potentially this rotation is what is taking place. Investors selling strength in NVIDIA to diversify portfolios.
Angelo, how much further does this reset have to go? And what do you need to see for you to say, look, this reset is over, it's time to buy?
Yeah, now we are about to enter a more seasonally favorable period for markets. A lot of looking at the upcoming catalysts will depend on what the Fed will deliver. There's a lot of sensitivity in rate cut expectations. But I think as we now in the pullback of the magnitude between 5 and 10%, I think that is a good point for investors to start pulling out their shopping list. We're about to head into Thanksgiving and Black Friday. I think it is a good time for investors to have that list of potential investments they want to deploy new capital in.
Brooke, you gave me this stat yesterday. I want to bring it up again because it was very important on NVIDIA. I mean, you mentioned more than 30 analysts raised their price target in NVIDIA, and yet we see that reversal like we did yesterday?
Brian, I think that just goes to show that there's just so much momentum behind this company, and they succeeded in gaining the optimism on the street. Ultimately, Jensen Huang, as Dan was pointing out, was able to downplay that AI bubble risk, and as one analyst sort of said, handhold investors here to really believe in what that could be, the potential to reach that sort of $500 billion in revenue. And so what we saw in the beginning of the open yesterday was really that hand-holding, really gain investors' optimism. And that's why you saw, as you pointed out, and as I pointed out yesterday, we saw price target raises across the street, really with this optimism that NVIDIA can and will do this, and investors should just hold on tight. But then we sort of got these comments, this fearfulness, as Angela was pointing out, this fear that what will happen with the Fed at the end of the year, and how will this sort of play out? And that's why we saw that reversal to the downside. And as you can see this morning, we're seeing a reversal to the upside, but not enough to necessarily convince NVIDIA investors this morning. As you can see here, the stock still hovering around that flat line, and it's fell as much as 1.6%. And so clearly this is a market where investors are trying to hold on tight, but then they also have their eye perhaps on other factors as well.
Dan, a good story on the Wall Street Journal homepage this morning, profiling AMD CEO Dr. Lisa Su. You and I have both talked to Lisa. I mean, she has changed the game for AMD. I mean, she has positioned the company very much as number 2 in the chip space behind NVIDIA. But going through that point, and this plays off what I think Angela just said, the fundamental case is still there. I mean, a company like AMD is aggressively growing. They have the orders, they have the business. It's hard to understand the sell-off we are continuing to see.
Yeah, I mean, look, Lisa Su said that the total addressable market will hit $1 trillion for data centers by 2030. They say that they're expecting multiple gigawatt scale deals to come through in the coming months. And so that doesn't sound like a trend that's dying on the vine as we speak, right? So we have other companies just getting into the space. Qualcomm is only now getting into the AI data center race. They have their own chips. We have Broadcom obviously building out chips for the hyperscalers, same thing with Marvell. So this isn't something that is about to fall on its face, at least it seems from the deals that we're anticipating. It is interesting to see how the analysts reacted. It seemed to be uniformly in the positive following NVIDIA's announcement. It seemed to be uniformly in the positive following AMD's Financial Analyst Day earlier this month, which is when Lisa Su had said that $1 trillion TAM. And so, yeah, it is kind of well, NVIDIA did what it had to do. It delivered the numbers. It delivered positive guidance. As Brooke said, one of the analysts mentioned that they were basically hand-holding investors, and then you see the stock kind of plummet on this broader sell-off. And so, you have to wonder, okay, well, what else do they have to do to kind of protect themselves? To be fair, this is a company that's seen its stock go through the roof over the past 3 to 4 years. So, I think they're pretty okay after, a day of declines.
Yeah, I think Lisa will be okay. Angela, let me go back to you real quick. Now, how concerned are you that the sell-off, which is getting pretty severe in crypto, that bleeds over to the broader stock market? Or is it already bleeding over to this broader stock market, looking through the prism of what we're seeing in AI stocks?
Yeah, thinking about Bitcoin and cryptocurrencies, it's certainly one of these investments that are the most sensitive to sentiment swings. There's not really that much fundamentals to provide that confidence to lean in on the pullbacks. Of course, that remains a highly sensitive asset class to liquidity, rate cut expectations. So I would see the signal as potentially some froth coming out of the market, which is not necessarily a bad development. Especially, as I said, that was one of our primary concerns heading into 2026, some of that excessive optimism, and the fact that we are seeing this recalibration now potentially presents a better setup. It's been still a good year. We're talking about double-digit returns for the S&P, so many may want to protect some of these gains. But I don't think it's something we should be extrapolating that this will continue or turn into something more nefarious, if you will.
All right, Dan, Hallie, thank you so much. Angelo, Brooks, stick with me. We have a lot more to talk about this morning. Coming up, Gap flat out earned my stock of the day slot. More on why next. All right, let's hit my stock of the day. It is Gap. It's always important to be critical of publicly traded companies, especially with respect to their earnings. And I want to be critical of Gap today as part of this process, but damn, it's really hard to poo-poo the third quarter results for this company. Here's what I liked. I'm just going to tick right through it right now. Gap's overall comparable store sales rose 5%, the highest in over 4 years. The once left for dead Gap brand posted its 8th straight quarter of same-store sales gains. That is certainly good. Old Navy is rocking and is now making a push into the beauty category. Good to see that. And back out the impact of tariffs, and Gap's profit margins rose in the quarter. All of this happened against a backdrop of Gap raising prices in select categories to offset tariffs and a more cautious U.S. shopper that tripped up the likes of Home Depot, Target, you name it. Dare I say this was a shocking quarter for Gap. Let's get the roundtable to weigh in. Angelo Karkafis, Brooke DePalma, and Yahoo Finance Fed correspondent Jennifer Schomburger. Brooke, coming to you. This was really the first week of retail. We're ending the week with really good results from a BJ's Wholesale and a Gap. And look, Gap has been on a hot streak really for about a year and a half.
Yeah, definitely seeing some momentum this morning. Gap up nearly 9% over the last month and up today about 7%. And clearly there's momentum, especially around Old Navy and Gap. Now keep in mind, this company, like many, like Nike, like Starbucks, like others, they're in the midst of, keyword here, turnaround. And so what we are seeing from these results of Old Navy and Gap beat expectations when it came to same-store sales growth. And what really resonated on this call and on many other calls during this week is that ability to play into value here. That's a reason why they said Old Navy, or rather the ability to play in across all income cohorts and really show up on that value proposition. And that's what they said was Old Navy and Gap did really well. Now, another part of this is that it was surprising to hear that those ads, I don't know if you've seen it, Brian, but this Cat's Eye ad around denim following American Eagle's ad with Sydney Sweeney around their denim ad, it did really well for the company. And they really said that storytelling, as I'm sure you'll hear from the CEO later, that storytelling and product telling really did well for them during this quarter, that they were able to gain all income cohorts to come into their stores and shop around. And that's really key here. How do you play into not only the high income shopper that's really propping this U.S. economy right now, but also how do you resonate with that low-income consumer as well? And it seems like Old Navy was really able to hit all those points this past quarter. Of course, Athleta, Banana Republic, more work to do there, but definitely seeing some momentum as well.
Brooke, it was a tough moment for me a few months ago when Gap came out with that ad because I told the Gap team I had never heard of Cat's Eye. So it's tough to admit you are getting old. You're losing sight of what's actually happening out there in the real world. But again, it's something I'm just going to have to deal with. Jen, over to you. What is your read on the consumer? Because at this point, I'm completely confused.
Well, I just want to say that fashion is cyclical and the Gap is back in vogue here because for all the talk about a softening job market, the bifurcated economy where the lower middle income consumer is pulling back on spending, well, Gap's results clearly showed that they are willing to spend on things that they want. And I gotta hand it to Gap because management was shrewd here. They decided to go after that pop group, Cat's Eye, and they really dialed into a cultural movement here. Because if you're able to put a pop icon into clothing that younger girls want, then it becomes more than clothing. It becomes more than cute styles. It becomes part of a movement. And that's really what Gap did in the third quarter. We'll see if that's able to translate into the fourth quarter. But to your point, yes, I think it shows that people still have some purchasing power there and they're willing to spend on things that they want and Gap raised prices, to your point, and people still went out and bought these styles. And look, I took a look at the website this morning, and the styles are cute. They're not tired and old.
Jen, you're just cooler than me. I'll just say it. It's fine. I'll put that in the universe. You always have been, and you're still cooler than me. Angelo, any interest in buying Gap on the dip or looking for retailers like them that have turned it around and might have a good holiday season as a result?
Yeah, that's a positive company-specific story, but I think the macro takeaway is that the consumer remains resilient. That theme has been constant with us for a couple of years now, and despite some of the concerns about a slowing labor market, we still have some stability. Yes, we are talking about a slower pace of job additions, but we still have rising incomes. And of course, we are still in this weird period of data delays, but looking at the state, jobless claims still remain historically low. So maybe we're talking about consumer spending that's not as strong or robust as it has been the last couple of years, but still additive to economic growth. And thinking about next year, likely that persists.
All right, believe it or not, we have a little over a month left in the trading year, but don't let the holiday calendar fool you into thinking there aren't any catalysts left for the market. Quite the contrary. Let's put this question to the opening bid roundtable. What are the biggest market catalysts left on the calendar for 2025? Jen, I'm keeping you to the end because I think I know what you're going to say. Brooke DePalma, coming to you.
Definitely what I'm looking out for is the consumer. I want to see the consumer spend this holiday season. We're getting some early projections from companies and firms like KPMG saying that consumers will spend about 4.6% more this year versus last year. That's about $850 more per shopper. And that's momentum, especially in this environment where we're hearing all about tariffs impacting consumers' ability to spend. Of course, keep in mind, prices will be higher as well. So that's certainly weighing into that. But also, just about 10 minutes or so, we're going to hear more from the University of Michigan, their consumer sentiment index. And what we heard last time was that consumers are not feeling too good about this economy right now. And so ultimately, how the consumer is holding up in this environment is all eyes for me towards the end of the year.
Angela, over to you real quick.
Yeah, I think for markets and risk assets in general, what the Fed decides to do in December is going to be a really important factor. There's a lot of debate around that, but I think the direction of travel is lower for interest rates, maybe though at a gradual pace.
Sorry, Jen.
Well, we all know I am the Fed correspondent for this network, and I think there's two major catalysts that we're looking for. One that you talked about in depth earlier in the show, which is AI and the momentum there, but the other is, of course, the Federal Reserve and whether they execute that third rate cut for this year. That seemed to be in question with that September jobs report, but John Williams of the New York Fed gave the market a present today because he put it back on the table. He said there is room for further downward adjustment towards neutral in the near term. So we know he's part of that key troika with Chair Powell and Jefferson, who's the vice chair of the Fed. That leads me to believe that that clump of Fed governors who I was sort of questioning could go either direction may start to lean towards that cut, even as the regional Fed bank presidents, four of them, Goolsbee, Schmid, Musalem, and Collins, have leaned more hawkish. So you could see a rate cut that could take the market on that Santa Claus rally through the end of the year. Of course, still kind of a coin flip at this point, but it's looking better now that we heard from Williams this morning.
Good to see the clumps at the Fed leading. All right, really good chat, you all. Have a wonderful weekend. Appreciate it. All right, are you loving opening bid? Of course you are. Why wouldn't you be? So be sure to tune into my vodcast, Opening Bid Unfiltered, every Monday for deeper chats with the biggest names in business. This Monday at 8 a.m., I have a new episode dropping with Coinbase institutional head John D'Agostino. He served up some big-time insights on this crypto route. Really good stuff right there. Straight ahead today, though, Julian Hyman has you covered on Market Catalyst. I am back on very shortly, just a few minutes away, for a chat with Gap CEO Richard Dixon on his impressive quarter and outlook. We'll be right back.